Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into Nocera, Inc.'s latest 10Q amendment. It's a bit like finding out your favourite restaurant quietly changed its menu. You think you know what to expect, but there might be a few surprises inside. This report focuses on correcting some previous reporting issues. Apparently, they needed to clarify some details about where their money is coming from and where it's going, specifically regarding different parts of their business. They're trying to offer investors a clearer picture of their operations after a little nudge from the SEC. Before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join us. This report is an update. Think of it as a patch on their quarterly report. It's labelled Amendment Number 1 and addresses segment reporting. That means giving a breakdown of how each part of their business is doing. This is required by something called Accounting Standards Codification. TOPIT 280, which is just fancy accounting language for tell us where the money is actually being made. Nocera assures us this isn't a transition report, nothing is changing hands, and they're still filing as a non-accelerated and smaller reporting company. Basically, they're acknowledging they are not a big flashy company, they are still small enough to qualify for some exemptions. As of May of this year, they had about 14.4 million shares of common stock floating around. Think of it as slices of the company divided among the investors. They are very clear this amendment doesn't change anything else that was previously filed, only providing more transparent disclosure about their revenues and losses in financial statements. The company reminds everyone that there are risks involved in the business. They want to make it clear that real-world outcomes can be different than what they have planned. Let's dive into the numbers and begin with assets, the things the company owns. Cash is up a bit, but accounts receivable, that is how much money is owed to them, stayed relatively flat. With a slight drop from December to March, they do not have zero inventory from December, but $9,608 this year. Looking at long-term assets, property and equipment, net went down a bit, but goodwill, a measure of intangible brand value, stayed the same. Switching over to liabilities, the company needs to pay. Accounts payable had a noticeable shift, going essentially from zero to almost $14,000 between December and March. Other payables and contract liabilities also inched up slightly, due to related parties had a rise. Total Nocera Inc.'s shareholders' equity is around $4.11 yuans, which is slightly down from December. They also explain the details of preferred stock values, additional paid-in capital, and retained earnings, how much money they have lost historically. Switching to the income statement, where we find the losses, the quarterly net sales were down at $4.5 million for the same quarter last year, a bit down, nothing too crazy. Total operating expenses also decreased year to year, which is good, but overall they still reported an operating loss of over $200,000. Other income such as investments also took a hit, going down pretty hard. Moving on to the cash flow statement, you get a good view of financial health of the business. Net cash used in operation activities came in at negative $115,000. Net cash inflow, however, comes from the financing activity. So operations aren't that healthy right now. Some of the cash flow came from issuing common stock at around $150,000. Overall cash and cash equivalents increased by about $47,000. Basic loss per share came in at 70.75, which is a bit better than last year's 7025. There was not much to tell from their statement of changes in equity other than net loss and common stock issuance. Focusing on some of the risks, they named their big customers. 3 customers represented nearly 70% of their revenue last year, and more so that 84% this year. That's pretty top heavy, as losing just one of these could have major impact. Also, a significant amount of concentration in customer accounts. On the other hand, on other risks, as of March of last year, a very large proportion of the suppliers that represent company purchase also went down. In March of this year, it shows that out of supplier revenue, less than 53% of it can be attributed to suppliers who make up more than 10% revenue. Their revenue is recognized across 3 sources, from fishing to catering to e-commerce, in line with standard accounting. This is just something they are required to do to verify to auditors that respect the revenue recognition criteria. They have $9,680 of raw material. Nocera deals with selling fish bento boxes as well as providing services. Total comprehensive loss attributable to the company came in at $250. Almost $600K is from prepaid expenses and other assets. They had some losses coming from financial assets and adjustments to fair value of warrant liabilities. They have land valued at around $877,000. Their goodwill is pretty high at around $2 million, given that goodwill. As a reminder, comes from buying other companies. The long-term debt portion is zero as of this year. A lot of the liability here comes from holding these warrants. Their company is organized in Hong Kong, Taiwan, and China. The company's activities consist of the company Nocera Inc., its subsidiaries, which are Grand Smooth Inc. Limited, as well as other companies such as Maxon Institutional Food Development and Guizhou Grand Smooth Technology. They had about $3.3 million in equity back in 2024. Operating activities are not providing them profitability, but rather using up a lot of their funds. Cash decreased to $267,000. Their total shareholder equity is about $3.4 million in the beginning of last year. See now. Let's talk about what this all means. Nocera is currently sailing in choppy waters while they are trying to expand. The path isn't clean. They're burning through cash and need to find ways to stabilize their income, which has been declining. There's some debt which they do need to pay. They need to find a way to balance these expenses. Right now, it seems like they're focusing on streamlining operations to achieve long-term growth. However, they still have some issues which may require additional time and resources. But if you really look at the numbers and the raw financial picture, they're shaky at best, and it'll take a lot more than they're leading investors on to believe to actually turn it around. Alright, that's our breakdown of Nocera's latest filing and the corrections. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching and see you next time.